Good morning, everybody. Today is the 16th day in the month of February 2022. My name is Heritage Akisa, market analyst at HotForex. And quickly, as usual, we check through the markets, see what the dominant sentiment is, if there are opportunities, the big stories driving markets, what asset classes are paying attention to, the opportunities available, and then how we can take advantage of it. But please always remember this is just a communication material. And non-invest communication should be considered as investment advice or investment recommendation. Just acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning in terms of the overall market environment, right, it's a light risk on environment. From yesterday, early yesterday, around just a little bit after 9, we had a little bit of change in the climate on the Russia-Ukraine tension that we've had for a couple of sessions now. And I had this written as a risk asset to hold on to gains on hope of further easing of tensions as Russia withdraws some troops from the Ukraine borders, right? That was seen yesterday where Russia published a video, showing, withdrawing some of their troops back to their bases. And that was seen as a positive for market. And we saw risk assets across board jump on the back of that, right? But I also had this written that I said, although comments from President Biden that withdrawal has not yet been verified by the US, and Ukraine also reported not long after that video from Russia that they had cyber attacks on their defense network as well as for two banks as well. Right. So that also has been a caveat that has capped some of the gains that we've seen so far, in the session. So far, yesterday we had a jump up, but so far it's really meandered. We've had mostly flat moves, but overall we're still keeping it very positive, and this particular sentiment is still very much dominant in the market. I had this written, I said, Aussie and Kiwi lead the majors, the high beta currencies and the antipodians lead the majors along with the card. While on the other hand, we have JPY USD as well as the CHF lagging amongst the major FX. Reason being the light risk that we have so far, optimism and positivity in the markets. Markets are still very sensitive though to the headlines from Russia and Ukraine. We saw that play out yesterday. We saw that play out on Friday. Right? So obviously in today's session and even going forward in the sessions ahead, if we have any major headline maybe more positive, that would be good for risk asset, but more negative would be bad for risk asset as well. So that's very, very key we need to pay attention to. Apart from that, we also still have the underlying story of inflation, and then the central bank, incoming tightening, right? First of all, we had UK CPI come out this morning, printing a 30-year high around 5.5%, right? Calling markets to, expect another, rate hike from the Bank of England in the next meeting in March. We're also expecting the Federal Reserve meeting minutes later in the day, where over the last couple of sessions, we've had Fed members like Bullard coming out saying they're expecting about 50 basis point hike in their March meeting, right? Consensus right now is for a hike generally, some saying 25, some saying 50 basis point hike, but all of this is still very, very, very much important to market. Yes, the Russia-Ukraine story has covered the entire, climate of the market, but that's still one thing that we need to pay so much attention to. And if that comes up being the case, the more market participants pay attention to the hike, the more markets price in rate hikes, so expect further rate hikes, or faster tapering, faster tightening of monetary policy. That's bad for equities. And if that happens, obviously that's not good for risk assets like the Aussie Kiwi, as well as the card and other high beta currencies. So there's that to pay attention to going into the session ahead. For now, equities mostly hold on to yesterday's gains, right? But on the US side, the US futures have failed to create fresh highs and are trading mostly flat intraday. Right? Oil bounced off yesterday's lows and is currently capped around $91 per barrel as at the time of writing. The VIX also eases, right, all in line with the current risk sentiment that we have, right? Dollar index also heads lower amid the positive environment, but not forget that we have retail sales data for the US as well as Federal Reserve, monetary policy meeting minutes as well. So that's also to pay attention to. In terms of strengths and weaknesses, AUD, NZD, and CAD leads the majors in line with the risk on environment, while JPY, USD, and CHF lag amongst the major FX. Although the biggest mover so far, AUD, JPY, is only up about 0.33% so far. We'll talk about opportunities and then we'll look at the risks involved and the calendar. Quickly looking at the charts. You look at the likes of the equity space, right? Okay, now this is even better off. Now, we started the day mostly flat, keeping yesterday's gains. And now we're seeing a continuation or a peak higher in terms of the positive environment. So this is also good, also solidifying the move that we're expecting so far. But we can expect further highs from this. We went up, came back to test the 15 minutes, 50 moving average here, and then we've continued to push higher as well, right? considering the downside we've had, coming from late last week as well, there is still a lot of room to the upside. Next, let's clean this out first. The next point of resistance will come in. Let's see, the lows going back to, let's say this low, particularly on this particular index. All right, this low going back to 20th of December, similarly tested around the 18, 19, let's see, around the 20th of January. Also, again, once again, resistance around here, around 2nd of February, sorry, 8th and 7th of February, and then finally around 11th of February as well. That could serve as the next point of resistance in terms of where we are headed. Obviously, need to put in mind this 45, key round number. But upside here is expected in line with the current environment that we have so far, and that's one thing to look out for. You look at the other bounces as well. We're also seeing further upside there, which is also an interesting one in terms of the current sentiment that we have. The VIX has also been heading lower. Right, we've not seen a player open up in today's session yet, but we've been seeing that lower pressure from yesterday, and that has still been in play. All of this still bodes well for more upside, more positivity for risk assets generally. For oil prices, yes, we talked about the de-escalation of the tension, also seeing for a downside in oil, not because oil is not a risk asset, but because that means that we could still see, or we could, still see Russia's supply of oil remain in the market, which is also a negative for oil prices, right? Because the oil prices have been jumping up in recent hours, because if we had seen Russian oil supply out of the market, that would have pushed price higher. So now with de-escalation, obviously we're seeing some downside on that particular one. Right now, oil prices have bounced back, right? Maybe tuning back into, the risk positive environment that we have so far, but that's what we have. And this is also keeping support for the likes of the Canadian dollar so far. So there's that also watch out for. Finally, the dollar index, was it? Right, the dollar index also have continued to print fresh lows, right? Looking at today's session, we have been down about 0.17% so far. But one thing you want to also have at back of mind is right now we are heading back towards the highs of this recent range that we had a hold for much of last week. Now, this is also interesting because we're expecting the Federal Reserve meeting minutes as well. If we have more members calling or clamoring for even faster rate hikes, right, up to even the tone of 50 basis points as well, that could also see the dollar gather some more strength. So there's that to watch out for. We could get some form of profit taking or some form of, reactions from this previous high as well as lows going back to the 11th of February. Now, with all said, what are the opportunities that we can look out for? Yes, we said Aussie is leading the majors, right? We've said NZ is also strong on the day. We've said that CAD is also strong on the day, right? What are the things that we are paying attention to? What pairs are we looking out for in terms of the session ahead? Now, I like starting with AUD JPY. Of all the pairs, I like this not because of so much, but I prefer it because in terms of the risk on risk of strongest and weakest major currencies, I like this pair looking for further upside. And today so far, it has also proven, let's see, it's also proven to give us more of that expected, buyers that we have so far. Let's just look at this. I think this is just a quick minute. All right, now we could look at this and say, what I like to see on AUD JPY, would I see a break back above, right? A break back above this key level around here. You can see this round number just dropping down a bit. All right, now you can see this previous high, right, going back to, let's see, all right. All right, now this round number around 8,300, you can see previous highs going back to the 9th of February, also tested as early and on the 10th of February as well. We had a little bit of reaction here, and now we are looking at a level as also an interesting one, right now. Now we've broken back above it. What I'd like to see would be a retest of it and look for further upside on this. There's still more room, about 40 pips, 30 pips, there about more room, to the upside. So we could look at that in terms of further upside on this particular one. If you drop down a bit, we could also look out for a pullback towards yesterday's highs, right? In terms of if you're not, interested in buying at the highs as well. An alternative would be a pullback towards yesterday's highs, also coinciding with, the 15 minutes moving average. That would also be an interesting one to pay attention to as well. Now, apart from this, looking for further upside in line with the current sentiment that we have. Apart from this, I would also like pounds JPY. Early in the day, we had data. Let's see, we had data for the UK. Was it just a second? This is related to the Wednesday UK data. All right, so we had a beating expectation in UK, data here. That's it. We had first of all from the monthly CPI as well for January. We had it, better than expected. We also had, generally better numbers across the UK inflation numbers generally, right? All positive across board. And this also calls for, more calls for faster rate hikes. I'm talking about the third consecutive rate hike for the UK, right, in the next meeting in the month of March. So that is also a positive for, the UK or the British pound this morning. Apart from that, we also have the positive environment generally also proving a little bit of support for the British pound against the JPY. So if I want to look at this pair as well, I'm also interested in this level because it was also the previous highs around 156.800 thereabout. Was also the previous highs going back to the 9th of February, tested again as support, going back to 11th, as well as early 14th, tested again on the 15th of February as well. So if you can get a breakout above this level, yes, we need to consider this round number as one to look out for, but clearly a breakout above this level, which you're currently having, I'd like to see a good break and a good close. And when it reaches this level, we could look for further upside on this particular pair. Key area here, we can anchor our risk around here. And obviously, next point of call will be around, this next overhead swing point very close to the 157.5 level, right? There's still more room in terms of further upside. We still have about double the numbers that we have so far in terms of further peak movement to the upside. Now, this is also one to look out for as well. We could still look at other options looking to pair high beta currencies versus safe haven currencies as well. But one key thing I want to point out to this particular outlook is the key risks here to look out for would be any negative headlines on Russia-Ukraine tension. That would be one to pay attention to. The reason why we're buying risk assets right now is because of de-escalation. So any negative headline that says that is not really the case, that says that we're not out of the woods yet, right? That could also be one to pay attention to. And then focus turning back to central bank rate hikes incoming, right? We've had one from CPI for the UK that was called for some. We're expecting CPI for Canada as well later in the day. Also an interesting one to pay attention to. And even from the Federal Reserve rate meeting as well, later in the day as well, that would also be one. If we have more calls for rate hikes, that is usually not good for equities, and it's a negative for equities, and that could also extend to overall risk sentiment, like we talked about. Like I said, we're expecting Canadian monthly CPI also, research for the US later in the day, and then we're expecting Federal Reserve meeting to play out for the day ahead. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask, and would always, do our best to help out. Thank you. To enjoy the rest of the trading session. Goodbye for now.